Today I will be showing you guys how I made $4,000 within a 24-hour period trading Forex. Alright guys, obviously we've been doing this live trading challenge for about 2-3 weeks now, and in end of November obviously my dad passed away, so I stopped trading just to once again take a step back. When I look at the charts, it's a little bit different than what it used to be. So about 2 weeks after he passed away, I just got to a point where I felt empty, and the only thing that I've known for the past 8 years is trading. It's the only thing that I've been interested in. It's the only thing that gets me going. Only thing that makes me wake up at 3 a.m. to look at my phone. And I decided to actually take 12 trades. So predicted 12 trades on TradingView beforehand. Took the 12 trades on the same live account we've been trading with. Didn't change all of a sudden a new account or anything in that sense, because we obviously want to show transparency. And we ended up taking 12 wins out of 12, and I was so shocked because I knew that mentally I'm not here, but still I end up winning. And that just shows that if you get to a point in trading, if you've already put in, I mean, I've been putting in 8-9 years of really long nights. I think it gets to a point where it is simple if you make it simple. So my emotions was already gone out of the window after everything that happened. So I just trusted in myself in a sense that I didn't care. It was like, okay, well, what's gonna happen is gonna happen. And I think that's really sometimes a good approach to take it with, because you know your risk, you know your reward, you know your risk management, you know everything in that sense. You just need to trust in yourself, and that's exactly what we will be seeing in this video.
Okay guys, so the first position was USD. That's the first bet that we will be looking at today. So we can see I entered about 17:32, so about 5:30 yesterday. So right, you guys can also see here was the prediction made. So it's about 17 hours ago, so about 30-40 minutes before I made the trade, I actually made this prediction. I mean, it's pretty simple. This once again acts as a really good tool for you to go back on and see where you could have taken the trade. So you guys can see I didn't wait for the best entry because there were so many things already telling me that the price should be buying. So let's get to the point. How did I get to this analysis? So first of all, what I always do is identify the trend. So what I did was pretty simple. I identified that previous resistance acting as an area of support. Okay. Then I simply added my fib on the weekly trend, and I saw this at 38% fib over there. So what I then do is create an order block, demand area, pretty much anything that you want to call it, between the 38% fib in that specific area. Okay. After this, drop down to the daily, and on the daily, what I want to do is mostly look for my candlestick patterns. Once again, yes, there was a FOMC meeting, but fundamentals moves with technicals. Okay, if the fundamental was to go against the trend, which is up, it would have spiked to the downside into this buying zone, and obviously went up. So when I started looking at the high time frames, I saw that hangman candle on the bottom of a trend, bullish engulfing candle, morning star formation. So I already had the confirmation on the daily, so I knew that I'm just looking for a retest on the smaller time frames. So what I then did is I just added my fib then on the smaller time frames. So basically just adding my fib from low to high, created a little bit of an order block, demand area, pretty much anything that you want to call it, between the 61 to 78% fib. Okay. So as I saw that we already broke out of this level, and by breaking out of this level, we already had the indication. So one thing that can help you guys a lot with entries is looking at the thing called liquidity points. So liquidity points is when a market is trapped within inside a zone, it obviously creates these spikes that comes out of the zone. So that then acts as the area of supply, and if that supply is then broken, that's when the buy comes in. So what I obviously saw was the break of that liquidity points over there, which I usually mark off. You guys will see this a lot with like a red dot. And then once we closed above that, I obviously took the buy position. So as you guys can see, I closed it after the news, and the reason is pretty simple. I mean, I'm a risk reward trader. I'm not a SMC, ICT, whatever, TLF type of trader. I don't even know what people say nowadays. I had a pretty small risk on this specific position, so I was risking about $100, and when the news got me into the volatility, so I was already in profits, I mean straight off the bat. But when the news came out, pushed me to a perfect 1-to-3 risk reward ratio, and that's why I exited the trade. Over there, as you guys can see, where is USD 21.12, I took my position out at a perfect 1-to-3 risk reward ratio. All right, trade number 3 is euro order. I mean, euro order is pretty simple, about a 68% correlation to USD. So I know if I'm looking for USD longs, I'm looking for euro order shorts. So already same thing, same position. Already see a psychological level that I sold off as well. So if you guys quickly go here, we will also see the prediction. So let's first look at the prediction that I made. Same thing, I didn't make this prediction this morning and pretend like I know what I'm doing. So already in the predictions, exact same thing. And I will show you guys the exact concept of what I'm trying to do over here. So they're perfect sell off to the downside. So why is the profits less on euro order? Because euro order has a pip count of 0.66, meaning for every 100 pip move you get, you actually only move 66 pips. So although I caught a bigger move, profits wise would obviously be less due to the low pip count. So if you guys look at my analysis, once again, it's a simple concept. I'm not trying to overcomplicate it. I already know that euro order doesn't sell from the same levels. There's always something to euro order. It's really difficult pair to trade. But once again, just took it from the higher time frames. I saw the 38% fib, saw the psychological level of 165, and then finally when I dropped down time frames, I saw that we're forming a little bit of a triangle formation. So I mean, another sell should be coming up just now as well. And then we have 0.1, 0.2, 0.3, and 0.3 perfect rejection candles, spinning tops, shooting star candle, not morning star, shooting star candle, shooting star. Okay, so sorry guys, sometimes I just mess it up. I think once again, if you have so much things that you've learned over the years, you sometimes obviously do things that doesn't always make sense. So yeah, just took the short position there. Simple approach. So pretty much the same approach, but a different approach to what I took with USD. Right, so Euro GBP, also a pair that I love, actually has a little bit of a higher pip count, 1.2 pip count, meaning for every 100 pips, the market move, it actually moves 1,200 pips profit wise. But the reason I closed this, I don't actually know. I think I just obviously closed everything because everything was doing good. So I also closed the trades that didn't go their way. Obviously, I'm going away on holiday with my family, and I didn't feel like holding the trade. So I only made a $50. So this is really not a good trade, to say the least. But let's still run over it and just explain the breakdown of everything. Obviously, it's not good to trade, close your losses or your wins for your losses or anything in that sense. But oh yeah, it was pretty simple. Just had the sideways market, break of sideways market, and obviously took the trade to the top side. So you guys can see we didn't actually move in this specific position. So this wasn't a really good trade, to say the least. Obviously had a really bad entry, number one, and number two. Obviously I could have left it for way longer. So just the sideways market forming, and obviously the close above the sideways market. The same thing that I explained with the liquidity points. We can see price sells from there. We have that spike over there, so that will form an area of supply. And once price closes above supply, we have a continuation to either side. Right, guys, then finally, I'm going to do 3 quick trades. Natural gas wasn't a big trade. I mean, this is quite a long position that you guys can still look into. I mean, if you are looking for more, I approach it more in investment sense, to say the least. Guys can see a little bit bigger stop losses. That's where my stop loss is, and I approach it in the sense of investment and money management process. So then secondly, we have oil. I mean, oil is just a normal day trade as well. We can see this buying pressure over there, and simply just looking for that trade. So I'm still sticking to my predictions. I mean, it's not something that I'm not looking for anymore. And then finally, we have the monster that is called gold. We obviously know this is where the money is made. So a lot of people already saw that rejection and really looking for short positions. For me, I just stuck with the trend and obviously looking for the long position continuation. Okay, so if we actually jump to gold, which will be the ending of this video, it is once again a really simple approach if you just understand the longer term first. there's the buying pressure, so we already know where's the buying pressure, where's the target. What we then looked for is obviously our fib over there, seeing the 78% fib, which acts as a last area of support or key level. Obviously jump to the lower time frames. Lower time frames already indicated to me that we should be going into a long position with multiple candlestick rejections, multiple indications of market patterns. We had once again the market coming outside of that zone, having a big break to the top side, and then on the retest once again took a buy position. So this was probably one of my best trades, and the same thing, had a little bit of a bigger risk, but still played out to a decent trade, and everything calculated to about a $4,000 profit margin. So if you take it in total, we took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minus 1, 12. We took 14 trades, meaning we risked $1,200, and we ended up with a perfect 1 to almost 4 risk reward ratio on the total portfolio. But the significance once again is we ended up closing 14 trades in profits. Took 14 trades, closed 14 trades in profits. Alright guys, and then finally USD ZAR. Really volatile pair. Obviously love trading the pair, but it is really risky, really volatile in its own sense. So also took a short position on that. Really simple short position to say the least. We can already see that flag just lining up to get sold. So that's usually what happens, is price keeps trending to the top side. Everyone sees it as a buying market. They take long positions, and then boom, price triggers to the downside. So if you actually go to the actual analysis of USD ZAR, I do believe it will keep dropping. Like I said, I'm not saying that my target is not going to be hit. So already what you guys can see, I identified selling pressure there to the left hand side. I added my fib from my high to low, and then from there is, well, obviously adjusted to everything. So what I did was I moved that over there, and I knew I'm looking for a sell within that block. Okay, so if we jump to the lower time frames once again, where was it, about 4 o'clock there, somewhere in that range. Once again took a short position, so we can see there's always clues within the market of where the selling pressure is at, and took just a perfect sell position. So like I said, the true indication was the flag for me. I saw price trending within a flag, and I obviously know how a flag plays out. Price trends to the top side, and then once again ends up dropping to the downside. So once again, right guys, and trade number 200. Once again, it's the whole point is to show you guys that if you build a good foundation of knowledge in the trading space, then it can get to a point where it doesn't matter what pair gets thrown at you, you can trade that pair. It's about looking at a specific pair and just analyzing what is, not whatever, anything in that sense. Is what is it happening at the moment, and what do I see happening going forward. So USD CAD also a little bit of a small trade. So you guys will also see how I made a little bit of an adjustment on USD CAD. So same with Euro GBP, I saw that price is consolidating. Number one, I obviously know that we're in a starting trend. Number two, I saw the consolidation. So same thing, did end up taking the sell a little bit earlier, which obviously played out. And once again, let me explain why did I take that trade earlier. So what I was anticipating is a little bit of a liquidity grab into that high levels. But once again, what I saw going to the 1H time frame, which is what once again why it's important to run through different time frames. Okay, point 1, point 2, point 3. Okay, so usually how this will work is that your resistance area, there's your supply area. So price dipped into this level once again, and then broke back below, so rejecting the area of supply. Psychological level, triple top, so many things started lining up, and once again that led me to take a short position. So once again adjusting to the specific trade. And alright guys, so the next pair was GU. So GU can still see we profited about $280 on this specific trade. It's a little bit of a premature buy to say the least. You can see that was my prediction. So I was predicting that price will dip a little bit low. It just made sense to me. But obviously this is how I sometimes change what I'm seeing, because this is what I was seeing. And then when I went to the lower time frames and I started looking at all my current trades, it made sense to me that price should be buying from current levels, because I started seeing obviously the double bottom, the psychological level of 2.5, and there's a few things that I obviously started seeing and identifying. So we could see price ended up buying from that exact level. So if you actually go to the analysis, this is what I always say, there's a difference between a trader and an analyst. Okay, so immediately I saw the psychological level, and I know that anything USD wise loves trading from psychological levels. So then I started going deeper into everything. So I started saying, well, there's a triple bottom. So there's already another confirmation. I saw the bullish engulfing, spinning bottoms. There's so many things that started lining up. And then once again, I saw the buying pressure over there, and obviously saw the area of demand over there. So I ended up taking the buying position, went straight into drawdown, and then obviously from there went straight to the profit target as well. Okay guys, and the next trade was GBJPY, which was actually a little bit of a different approach to the market, to say at least. So I already knew going into GJ that I'm looking for short positions. Once again, I'm looking for Euro GBP buys, meaning I'm betting on the pound to get weaker. So that was first confirmation. Number two, I already took a short on CHF meaning that I'm saying that JPY is going to gain strength. So correlation wise, I already knew that what I'm looking for. So let's quickly go to GJ. Once again, I'm just going to keep showing the predictions so you guys don't say that it's easy. Once again, there's a lot of people that love hating on things rather than trying to learn. They rather spend their life. So GBP order actually skipped. This was the only pair that I skipped. And the reason for that is I saw the triangle formation. So I knew we had to go and make a third touch. But entry wise, there was just not a good entry, so I couldn't enter on a third touch and take a sell position. I didn't want to take a buy position, so that's actually the only trade that I didn't take. Then with CHF so this is the prediction. Like you guys can see, I was predicting a sell from there into the lows. Okay, but then obviously price was already below that area, so I knew that taking a risk of a sell there is quite risky. But once again, the market repeats itself, and that's the reason for these videos. If you understand what happened, you will learn to understand what's going to happen. So I knew that if price sells from there and breaks through this area we have over there, there was a retest and a sell-off to the downside. So what I was looking for is the exact same thing, just a retest there and a sell-off to the downside. And that obviously led to a trade that I took over there, and stops above that, and obviously just a perfect 1 to 2.4, 2.5 risk to reward ratio. Same thing, risked $100 on the specific position, and as you guys can see, closed it on $250, which is about a 2.5 risk to reward ratio. Right guys, and then the most traded pair, EURUSD, actually a really simple trade. We can also see the $300 mark getting reached, so perfect 1 to 3 risk to reward as well. Once again, just want to show the predictions as well, so you guys can understand what was my thought process in that specific moment. Saw price rejecting this area, so already knew that something is happening at that specific point of confluence. I saw the 1.8 psychological level, so I saw everything lining up. All I needed to do is obviously wait and see if we do have a shift of momentum. So what I then saw was that little bit of a break above that area, and then when I went to the high time frame, saw the trade, and then once again took the position. So if we go to EURUSD, it's once again going to be about focusing on the smaller time frames. So over here we had the same thing. Price was trading to the downside, so there's multiple ways to identify this. We have the bullish flag forming as well. Okay, price trading to the downside, breaking to the top side. So that was one way to see it. Number two is obviously all the candlestick pattern reversals, a trend line breakout. So there's so many different things that you could have used to take this specific position. Sorry, someone just wanted to come and show me something on trade that I actually took yesterday. And then we had that break. So this is actually a really simple trade. Usually when I see a break like that, what I'll just do is once again wait for a position, wait for a break, and then a pullback into the golden zone. And you guys could see I had a really small stop loss because I identified that buying level, I identified that buying pressure over there, and extend that over there. and then obviously just took a nice buy position to the top side, obviously equaling to a perfect 1-to-3 risk reward ratio. And same thing, I obviously knew that I could have left it a little bit longer.
Alright guys, thank you for everyone that is watching and keep supporting this channel. Obviously this live trading videos is something that I want to do more often. I would love to obviously get into the streaming part of it, but due to time, I mean, that's the only reason keeping me back from going live on YouTube or Instagram or anything in that sense is time. I work 9 to 9 every single day, 9 to 11 most days as well. I mean, this is a Saturday at the moment, so it's just a time thing. But sooner or later, when there's some more time, I will try and get more creative, more innovative, and obviously get a way to share more towards you guys as well. Cheers everyone, thank you for watching.